Hello, welcome everybody. I would like to thank all the attendees that are here today to listen to our topic of the month, regulated secondary transactions for private securities. My name is Andrew Dix, and I am the founder and CEO of Crowdfund Media Group. We are the publishers of Crowdfund Insider, and we are a digital news site that covers the full stack of fintech, including digital assets, including securities, crowdfunding. And I am very, very happy today to have three experts on a topic that I think is just of key importance for the industry of online capital formation or securities crowdfunding, each bringing a unique perspective to the space and pursuing something that I think will help fuel the entire industry going forward. So I'm going to ask each of our three panelists to introduce themselves briefly, because they will do a better job than I will. And I'm going to start with you, Lee, up top there on the right. If you can just share with everybody who you are.
Sure. Great. Thanks, Andrew. Really appreciate it. My name is Lee Saba. I'm the head of market structure and CTO for Rialto Markets. Rialto is a FINRA registered broker dealer, and we run and operate an SEC recognized alternative trading system. Quick background on me, I spent the bulk of my career on the asset management side, spent about 18 years at Wellington Management overseeing their electronic trading. Also did what I call the Boston trifecta, did a stint at Fidelity and State Street over the last 30 plus years. And I also co-chair the fixed trading community, which is an open protocol for, the transmission of trading related data, whether it be pre-trade, trade, or post-trade.
Awesome. Thank you, Lee. Let's jump over to Jamie from Securitize.
Sure. Jamie Finn, president and co-founder of Securitize. We are also a FINRA registered broker dealer and have an ATS for trading securities. One thing that's a little different about us is we do everything on the blockchain. And so we work extensively with tokenized securities. We also offer a full suite of transfer agent services for customers. We're currently have about 1.2 million users on our platform and about 3,500 issuers working with us today.
Awesome. Howard, last but not least.
Yeah, I'm Howard Marks. I'm CEO of StartEngine. We're an equity crowdfunding platform. Our mission is to help entrepreneurs and investors achieve their dreams. We started about 7 years ago. We have raised roughly $600+ million for companies. We have a trading marketplace called Secondary, and it's an ATS as well, regulated SEC and supervised by FINRA. And we basically, our focus is to help companies raise capital and then help trade those shares on our secondary market. And we focus on the Jobs Act, which is mostly Regulation A and Regulation Crowdfunding.
Awesome. Okay. So we have three very key entrants in the primary issuance market today that are facilitating our early stage firms up to $75 million. Both of those exemptions are accessible for non-accredited investors. And then Reg D 506C, which is old Reg D, except you can generally solicit. And that means you can promote it online. Crowdfunding, securities crowdfunding. But what about an exit? How do you get your money out when something is doing well, or maybe you just want to get your money out for whatever reason? Historically, when you buy a private security, you are expecting somebody else to buy that company, or perhaps an IPO or public offering on down the road. This can take a lot of time, as we all know, because things don't always move as fast as we would like them to. So today we have innovators like these three platforms that are enabling investors to trade in private securities. That means you can sell these securities before an IPO, before somebody purchases them. And this is just, it's key. It's very key. It's an evolving space. It's going to take some time, but it's my opinion this is just a huge aspect of the future of online capital formation and securities in general. Today, I think that these guys represent the new, marketplaces. I think when you look at the NYSE and NASDAQ, they've become more of an exit opportunity for early investors as opposed to an opportunity for people to buy securities and make a gain. People get out when they go public. If you want to get that big gain, it's a risky investment. This is where you're going to go. You're going to go to the private securities markets. So I want to start off the questions with some explanations, because in all honesty, when I got into this, I really had no idea, what an exchange was or what an ATS was and what are the differences. So I'm going to start with a little bit of semantics here, and I'm going to ask Lee if you can explain what is a regulated exchange in the United States.
Well, so you're talking about two different things here, I guess. From a Rialto perspective, obviously, we run an alternative trading system, which some folks have, I guess in the retail world would consider it like a mini style of an exchange. We are not a national exchange by any means. An ATS allows a broker dealer to match buyers and sellers under Reg ATS. So we're kind of like a mini area to allow the transactions of these securities. Obviously, all of us focus on the private markets right now, and the Reg A, CF, and D landscape is where we're hanging our hat. So I guess to answer your question, we are we're here to facilitate trading where you can't on the public exchanges, and I guess just to tie it back to private markets, I mean, it was theoretically illegal to invest in a security that was private for a non-accredited investor, pre the Jobs Act. I mean, which is it's absolutely fascinating to even say that. You could not do that. Post the Jobs Act, folks can now get investments into those. That in itself was an amazing step forward. But now what I think all of our firms are offering is the ability to trade in and out of that. If you missed it on the primary offering, even within a secondary market, you can now, within the primary market, you can now get access to it in the secondary market or sell your current position. So I think, we are more of, and I think you coined it well, we're less of an exit strategy. We're more of the in strategy, how to get access to this.
Okay. All right. So that's good. I want to get some more clarification on the difference between an ATS, which the three of you operate, and an exchange. I'm going to start with you, Howard, or go back to you.
Sizable. But they're no longer really FINRA supervised. They have a different category. Now, in our case, an ATS is some people call them dark pools. They have different names for these things. But in ATS, there's not that many in the United States, 50 plus that exist. And we're supervised by FINRA, which is the regulator that was appointed by the SEC to supervise our industry. And the main difference is that we get to pick our own way of operating it. So in our case, for example, we don't have market makers, for example, which are companies that buy and sell stocks on the exchange to create liquidity. So we set our own rules. We can set our own market hours, when we open, when we close. We can decide what kind of securities we accept. We have a lot of flexibility. But ultimately, you'd call it like a private exchange. It's not national market. It's private, and we can decide if we want broker dealers to be associated with it and subscribe to it or not. I mean, so there's a lot of flexibility, but it does give us the right to allow people to post a price of an ask that they want to sell some stock, and it allows us to have people place a bid, and then we match those.
Okay. All right. So that's good. So the three of you, I believe all three of you are issuing securities under Reg D, Reg CF, and Reg A plus. But there's different rules. I realize this gets to be a little bit convoluted. about when you can actually trade these different securities for an issuer. Jamie, can you clarify that for the people that are attending and myself included?
Maybe. So I'd say generally speaking, these are true for U.S. investors. This is not necessarily true for foreign investors because it does get a little bit more complicated under Reg S, which we're not discussing. But generally speaking, a Reg D investor is locked up for a year, so they're not able to trade those for a year. There are some special exemptions where you can do some trading between accredited investors in certain windows, but we're not going to go into that here. Additionally, under the CF exemption, you have a 1-year holding period before they can be traded. And the most interesting one, in my opinion, is the Reg A plus structure where you have immediate liquidity upon completion of the initial offering. So think about it this way. Reg D, Reg CF have 1-year holding periods. Generally, Reg A plus, you can trade immediately after the fundraise is complete.
And I would say that's a key aspect of an issuer raising capital under Reg A plus. Wouldn't you agree, Lee?
Yeah, no, 100%. I mean, again, I think the holding periods are unique, obviously per exemption. But the Reg A plus, again, once the raise is completed, you can start, putting yourself on the ATS for secondary liquidity.
Yeah, I think that's really powerful for people looking to raise capital online and investors as well, immediate liquidity. So we're talking about exemptions, which I know can confuse most people. It confuses me too. You're not alone. But let's talk about the different types of securities that you can make money under, and then the ones you'll trade.
Right. So we exclusively use Regulation A, which is you can raise up to $75 million a year, and it has no restrictions on liquidity. But what's important is when you raise the capital using Regulation A, the subscription agreement that the investors sign with the company has to allow the shares to trade without restrictions. The company can impose restrictions. The securities can be in different classes. Could be preferred securities, common. We do mostly common. That's what we do. And regulation crowdfunding is a $5 million maximum per year rule. And there, again, we mostly do common shares. We actually tried to trade. It's interesting. We had on our secondary marketplace a company where they issued originally preferred shares with their Regulation A offering. And then they issued with us common shares on Regulation A. And the amount of work to undo the preferred was tremendous. Tremendous. It's very hard to trade because of the restrictions. The preferred has certain restrictions that are not easy, simple. An example would be the company has the right to purchase those shares, first right of refusal. Well, that has to be undone. And with common shares, you don't have any of these things. And mostly corporations. If you have an LLC, then you have to sign the operating agreement every time you trade shares. So imagine you're trading shares and you have to sign things and there's all these restrictions. It just doesn't make it practical. So we decided early on to issue common shares with no restrictions. And therefore, when we trade, we have instant clearing. Instant meaning the buyer gets the shares right away. The seller gets the money right away in their account. There is no delay, 2 days, 3 days, 1 week, 2 weeks, whatever, for the paperwork to catch up. That is our concept. It sounds very much like crypto, where crypto has that ability to move things very fast. So that's how we designed ours.
Okay, so you're only trading common shares today?
Yes.
Going forward, is that going to remain the same, or?
Yes.
Okay.
So companies who come to us with preferred shares, we can give them the option to go back to their shareholders and say to the ones who would like to sell, they can convert into common. And that's an option usually the shareholder has.
Okay.
They can elect to convert their preferred into common. And then once it's common, and if it's issued under Regulation A, we can trade them.
Okay. I'm assuming that all these companies have their own legal counsel, but do you point them in the right direction? Do you give them options, or do you just say, talk to your attorney and figure it out?
I think it's both. We tell them what we would like to do, and
Okay.
we know from our experience what they should do. But ultimately, the opinion of the council is very, very important to us as well, because if we issued the shares under StartEngine, we know exactly what we have. We're the transfer agent. We have the records. We understand everything. We have even the agreements. But let's say we didn't issue those shares. Then it's a black hole. We have to figure out what happened. Who made the issuance? Is it correct? Was it done with the right exemptions? Was the issuer, at the time they issued the shares, had all their filings properly done? I mean, you're talking about a list of things, correct? Because or not, they would lose that right for the exemption, Reg A. You can actually issue shares on a Reg A and still lose it.
And is the most common, I guess, to play on that word. And like Howard said, it is difficult, I guess, more difficult with the preferred shares. But yeah, no, I think, there's also another aspect to this around just sort of the fluidity, I think, that was mentioned, where, we're rewriting the underpinnings of this infrastructure. This isn't like the New York Stock Exchange or NASDAQ or, necessarily cleared at the TCC, at least not yet. These are securities that have a different microstructure to them behind the scenes. And the fact that we can all, and I'm pretty sure Securitize can do this as well, is, you trade and, the shares move and the cash moves all within one fell swoop, very quickly. I'll just call it same day settlement for the traditional finance folks, as opposed to T+2, T+3, T+5, which is trade date plus whatever 5 days. And I think that's a huge step in the right direction for all of our firms and anybody in the private securities markets right now, especially on the ATS side.
Okay, so no safes, because a lot of platforms, raise capital in their safes. You can't trade that. You can.
You know what? It's safe is not safe, first of all, and then it's a synthetic derivative. I don't know if you study safes. They're neither on the balance sheet nor they're nowhere. They're just a footnote on your financial statements. It's very complex. They have different triggers, different rules, and frankly, no, we wouldn't do it. I'm sure there's a way to justify a safe trade somehow. We just won't do it.
Okay, and so for people who may not know what a safe is, it's a simple agreement for future equity. It's kind of like an option. I guess that's a quick and easy, down and dirty way to describe it. And some early stage companies will use that because you don't have to put a valuation on your company. It's very founder friendly. So I'm going to jump over to Jamie now, because you're blockchain native, right? You are. I would say you're one of the top DLT platforms for primary issuance and secondary trading in the world, right?
Yep. Yeah, we are definitely a leader in the space.
So, which securities are you guys, enabling for trading?
So what we have on platform today that you can log in and trade right now are interests in venture capital funds. Those are tokenized. We have equity in a company like Exodus, which is on our platform and trading. And then real estate is the next category that you'll see pop on there. We also have a customer who did a revenue share type of arrangement that'll be live in trading soon as well. So we have a variety of different kind of products on platform. Obviously, equity shares, kind of common equity is a great, easy one to trade. But we do work with real estate, venture capital funds, debt, all sorts of different offerings in that area. And so, our secondary marketplace is designed to support that.
And recently, I saw this, and it seemed kind of quiet. You enabled an investment of sorts in a French basketball team. Mm-hmm. Can you explain that to me briefly?
The offering itself is run, so that's being done through Counterpoint Sports. And yeah, you get an interest essentially in the team through the offering, Maquillage, and a few others. And essentially the shares that you buy are at a 20% discount to the IPO price. And so that's a really nice kind of interesting product. They're coming on, they're marking the market through our platform, and then they'll go public on the NASDAQ or a similar board later. So that's an interesting approach that they've taken. It's kind of a stepping stone using the ATS to understand, where the consumer demand is, what the right price is, and then once it's priced, going onto a big board.
So it's also a way to engage with your customers, your brand ambassadors, get them involved early,
Yep.
and then open it up to a broader market, correct?
Yeah, I mean, exactly. So I think the one of the things we have observed is kind of the word crowdfunding doesn't always have the best connotations.
Right.
And so, the word that we've seen used more often now is community funding and kind of building off of your community. We're big fans of that. That's what we saw with Exodus when they raised $75 million on our platform. Is they actually marketed the deal themselves. They did not use our broker dealer. They marketed the deal themselves to their own community of users, and they raised the capital themselves from their own community of users using the Reg A Plus exemption, which we thought was fantastic. They had to exclude a few states because they didn't use a broker dealer due to blue sky laws, but nonetheless, raised 75 million bucks through that, and they gained a whole heck of a lot more fans in their company.
Since you mentioned blue sky laws, I don't want to get too in the weeds on this. Do you want to explain to our listeners what that is? And it's kind of a confusing, convoluted thing that should go away.
Well, there's federal law and there's states law, right? And so in some states law will supersede federal law in some cases. And in this scenario, the state's law has some additional disclosures that need to be made and additional regulatory kind of things that hurdles you have to go through. And so there are certain states like Florida, Arizona, and New York that frequently have these additional items. And so if you use a third-party broker-dealer on your offering, you're able to sell to retail folks in those states. And if not, you're really not able to sell to them.
So these are all things that the three of you, point the issuer in the right direction, or you enable, or it's coordinated with counsel, correct?
Yeah, and I know all the platforms deal with blue sky laws appropriately.
Yeah. Okay.
Yeah.
So let's talk about collectibles. I want to talk about collectibles because Howard, you fairly recently have started to list, and I assume trade, a kind of an entirely new asset class. You've got baseball cards, you've got wine, you've got art, and my guess is you have other things in the pipe or already on live on your site. Tell me.
So one thing that I observed was this whole idea of the ATS, the concept of an alternative trading platform, is that the key is you need to have companies, issuers, or things to trade. You have to have things to trade. And that's hard to do, by the way, because first of all, a lot of companies are afraid of trading because they're like, oh my God, my stock is going to go to zero and I won't be able to raise any more money. And there's still a lot of, I would say, issues that people are trying to figure out and learn. And so what's nice about collectibles is you don't have a person having these anxieties. The Marilyn Monroe painting that we have, the Warhol, it's a lithograph, it's not a painting. And we put that on Collect. We have a few hundred investors. Some will say, hey, I'll sell my shares. I paid $10, I want 15, for example. I don't know. So for us, collectibles is such a natural to trade. It's such a natural to trade. Why? Because it's a limited, one-time only sale. So not like a company where you're going to raise more different classes of shares, more shares over time. It's a one-time sale. And then it becomes an asset that you can trade. And that is why we chose to do collectibles. We have a few dozen collectibles right now. We plan to do a few hundred.
Oh, okay. That's a good number. Yeah, Lee, go ahead.
It gives us stuff to put on our platform. Plus,
absolutely.
We have companies. But I have to tell you, the companies, wow, it's a conversation to get them going. It is a big conversation. Now, we get it done. We've signed a few hundred companies. But, oh, my God, it's hard. So we need proof. We need proof. Once we get volume, we get trading. It's a lot easier.
Okay, we're going to come back to that. Lee, you wanted to talk about.
Oh, yeah, no, thanks, Andrew. Yeah, no, I think it's interesting, right? Because again, and I just want to make sure I highlight for the folks that are dialed in is that these are wrapped in an exemption, right? A Reg A, a Reg CF, or a D construct. So, it makes them, real securities in the United States. So, the fact that you're, I guess, fractionalizing an asset like a painting or a basketball team or something like that, where you can actually own shares. Again, the secondary market's just a great, avenue for realizing, whatever you want there, or again, if you missed it. But I think also there's some missing points there too. When you do fractionalize a piece of art, say, for example, or a car collection, I mean, somebody needs to authenticate that, right? And make sure that it, I don't know, Sotheby's or somebody signs off and says, that's legit. Is it insured? Is it custodied accordingly? And all those things are, again, are in the offering statements. And, and it's something that I think can give investors a little more comfort about what they're buying, as opposed to some random NFT. And again, it's not necessarily a segue into maybe a future chat here, but NFTs can also be wrapped up in this in an exemption construct as well.
Yeah, and some believe they should all be wrapped up in exemption. So that's a good point. So Jamie, where are you on this in esoterics? Are you guys doing other fractional? Are you doing NFTs? Since Lee mentioned it.
Well, I mean, NFTs are non-fungible, so by nature you can't really divide them into shares. But we are definitely doing interests in that category. So if you were to take an asset like an NFT and then package it into some vehicle, like an SPV or something, and then sell shares in that SPV, yeah, we've seen a ton of people come to us with things like that. I mean, I think one of the challenges the NFT market has today is you may have a $7 million NFT, but who's going to give you $7 million for it? And so that's the question that is on a lot of people's minds. And so in looking for liquidity, they're packaging it into a new asset could be really valuable and a nice way for them to get kind of an exit on it. We do have one customer in particular that's working with us on music royalties. And so I'm really intrigued to see what happens, right? Because in the crypto world that we're operating in, and NFTs in particular, there's one firm, I'm not going to use names on purpose here. There's one firm that's doing it in security, and so we're going to sell it that way. And so they figured out a way in the US structure to be able to sell that type of NFT. It's not really an NFT again, but the rights to that song essentially to a variety of investors. And so, yeah, I mean, I think the marketplaces are going to have, and this is one of the really cool things about the space, everybody's going to have slightly different niches that they're focused on and kind of different things that they're, executing on. In our world, we're much more kind of crypto centric and crypto friendly. Whereas in other worlds, they may be looking at different asset classes, real companies doing certain kind of business models. And so I think it's great because as a user of the platform, you can type and log into your community and then work with that platform for those types of assets.
Yeah, that's very interesting. Thanks for sharing that information. I would assume that the first NFT song offering that you mentioned may capture the ire or interest of our regulators if they're fractionalizing revenue. I would think so. Yeah.
You're using logic. Crypto doesn't always use logic.
Yeah, you're spot on with that. Okay, so let's talk about one of the most challenging aspects of secondary trading in private securities. It's liquidity. And I think for most people, when they think about, trading shares, they're thinking about going to Schwab, they think about going to E-Trade, they hop on and they, post their order and it's T plus, is it T plus 1 or T plus 2? It's T plus whatever, something today, and the trade happens. But when you're dealing with an emerging market like this, which is private securities for retail and institutional players, perhaps digitally enhanced, there's a challenge there because it's not that big yet. Now, I truly believe that this is going to be a huge industry, but it's going to take some time to get there. Howard, what are your thoughts on liquidity? How will StartEngine manage trades going forward, and what do you foresee?
So it's a two-sided marketplace. You need buyers and you want sellers. on both sides. And liquidity, if there's few buyers and few sellers, the bid, the ask will be pretty sizably different because someone will say, I want to sell it for 10. Someone says, well, I want to buy it for 8. There's no match. But when you have a lot of volume, you'll find that the buy, the ask, and the whatever people are willing to buy it for will shrink down to very small margin, which is great, so that you can have a lot of trades. So for us, we want to be able to start building volume, and that's why the collectibles came into play. Because if we can launch 10 to 20 different items a month, we will be able to have a lot of traders. And the more traders you have, the more traders come. The speculators, we don't know will they come to our platform or not. The ones who will buy and sell on the same day multiple times, round trips, we call them round trips. We can do that because we don't have any clearing period. It's instant. So you could say, I'll buy the Marilyn Monroe for $200 that 300 companies signed. We know it's still a big sell to get the companies to go online, especially because they'll see the bid and the ask as being so widespread. People are going to say, look, I paid $10 for the shares, I want 15. And people who say, no, I think it's worth 3. And it's just going to be confusing. And someone gives in on the price and the price closes at 5. And that will scare the company. They'll be very scared about that. But it could also go the other way. We don't know. But ultimately, we need to build that marketplace. And I think it took us years to get the license to have the ATS. And I think it's going to take us years to get that momentum to a point where it's very, the volume is good, that we have thousands of trades a day. That's what we're trying to do.
Yeah, you got to start someplace, right?
Yeah.
Everybody always wants to, hit go and boom, you're there, but that's not the real world. So you guys are handling, you're effectively creating an order book. You're not
Yes.
a market maker. People are posting buys and sells, and then they converge over
Correct.
time.
So we chose to have no market makers. We show the order book to everybody. So it's complete transparency. And we have no ability to margin. So people can't borrow money and short stocks. And we don't allow options such as buy, puts, calls, and collars and derivatives, stuff like that. It's very much of a video game type of approach where it's peer-to-peer.
Okay. Lee, what about Rialto Markets? Volume and trading.
Yeah, no, I think, another way to think about this is, more fluidity. We chatted earlier about, how folks, just the fact that you could even invest in private companies was just a huge leap, which is fantastic. Now we provide, secondary trading options, across all of our firms. And, that in itself is a big deal. But then when you start getting under the hood, and again, I just kind of want to keep it simple, is that, if you have an issuer and they've raised, I don't know, $2 million under Reg CF, and they've got, I don't know, say 1,000 investors, that's really only 1,000 investors right now that are focused on that particular asset, once it matures or seasons. If you have another one they raised 75 million and they've got 200,000 investors, well, their liquidity profile might be a little bit different. But then when you mix everybody into the melting pot, I guess, of our ATSs, you're going to now see different exposures and networking, kind of cross-pollination. So I've been kind of using a term called fluidity. Like we're flattening or creating ease of use in our platforms, so that you can actually do this trading very simply and something that resonates, I think, with folks who have already participated in their Schwab or Fidelity accounts over the years. So I think, the story is different for every security. Liquidity isn't a guarantee by any means. You can put out whatever you want out there, and if nobody's willing to buy it, or it is what it is. So I think we do have a long, some road to hoe here to figure out where we end up. But some things are going to trade like water. Some are going to be a little more, less liquid. But the option's there to trade them.
Okay, awesome. Jamie, so you have funds, you have single security issuers, you have a growing number of securities on your platform. Tell me, volume and how you're managing this trading.
Yeah, I mean, I would echo the other comments. It's a continuous. We see a lot more trading around the value of the assets that are in the private securities, and the volume is very peaky. It'll come in on near the end of the quarter. We'll see a bunch of transactions. It'll kind of go slow for a bit. It'll come back before the NAV gets struck. And right now we have the most securities, kind of blockchain-based securities, on platform trading, and some decent diversity. And so we see pretty decent volume, actually, like a very mature asset like a blockchain venture capital fund, which is in its 4th or 5th year. I can't remember exactly the age or vintage of it, has decent liquidity. It'll trade, similar volumes to what a NASDAQ, not like an Apple, but like a lower tier kind of NASDAQ traded company worth like 0.1% of its market cap on a daily basis. But that's, a mature product that people understand. They do nice reporting. They share good information. And that's one of the most fundamental things that has to happen if you want liquidity. Yes, you need people, buyers and sellers, but those buyers and sellers need data, and they need data about the actual product. They need to be able to learn how the company's doing, how it's performing, how it all works. And that's why one of the things we were frustrated with some of the other products in market is they don't tell you anything about the company, and you have no access to the data. So if you were to go into our marketplace, you will see there's an entire section that's updated continuously just on information about the company, how it's doing, what they're publishing, and all that stuff's at a, kind of immediately accessible. And that to me is fundamental. We definitely want to bring in market makers. We definitely want to bring in other types of kind of liquidity options that are out there. But it is a process, as Howard said, and it takes time to build there.
Okay. All right. That makes a lot of sense.
We're less than 9 months into our journey.
So. Yeah, absolutely. First innings. I hear you on that. So, Howard, I'm an investor. I've bought shares in StartEngine, and I decide one day I want to sell my shares in StartEngine. I go to my account, I log in, I see my shares, I hit sell. Somebody buys them up immediately because there's so much demand for it. I get the cash immediately. It's held on the StartEngine website, or is it held someplace else? Is that gain, this enormous gain where I doubled my money, within a couple months? Are you guys tracking the tax information just like a Schwab would? Is it very similar to that type process?
So the answer is the money that you receive for selling your StartEngine shares sits in a StartEngine account, which is basically managed by us. We have, like a bank, a special reserve account where we put all of our customers' cash in one account, but we track who owns what. So that is what people call carrying broker-dealer, a broker-dealer that has the ability to hold cash and securities, which is what we do. Secondly, we do track the gain, and we do send a 1099 DIV to the investor after the end of the year so that they can file their taxes. So it's very much similar to what you would see in a brokerage account, and that's what we are. We're very much similar to a regular broker.
Rialto Markets League.
Yeah, so we are not a carrying broker at this time. So each client that shows up on our trading venue cover that position. At that point, it's up to the bank and the transfer agent to issue the 1099s.
Okay, Jamie.
I mean, it's very similar. I think ours is we have the same, very particularly with Rialto. In fact, we are the transfer agent for some of their products, so it's the same process. I don't think there's much to add from our side.
Okay,
we're not a carrying broker dealer either. So anybody who's dealing with blockchain or crypto, you can't be a carrying broker dealer. They're not fans of that
yet, right? Yet. Howard. Several years ago, you and I had a conversation about your opinion that it would be great if private securities that were issued on securities crowdfunding platforms could trade across marketplaces, because what you're seeing is you guys are not alone. You three are not alone. That other platforms are pursuing this as well, and some have indicated they're going to do it, but they have yet to do it. Is that part of the future here, where I buy shares on StartEngine, but I want to trade them, with Jamie over here?
So I think that is absolutely the future. I don't think it's possible today, simply because we would have to integrate the ability for all of the transfer agents to work together with the platforms. The interoperability is important in this case. However, it is possible, maybe, with the right legal support, to trade shares that are issued under Reg A, but yet issued on a different platform. And there's some legal ramifications to that. It's a little complex because a company, for us to do what we call the state regulations, the blue sky, the investor has to have access to financial documents, including the audit and things like that, right? And these are usually posted in a what we call a manual, a public manual. One of them is called Mergen, and then that gives the investor access to that information, and therefore they can trade. So it's complicated. Every state has a different view on this. Anyway, we are doing a lot of research on that. I don't think we have an answer or a solution right now.
You're working on it.
Yeah, we're working on it. We think
Lee?
it's possible down the road.
Lee?
Yeah, I think Howard's correct. The market for private securities, in the secondary, facilities here are disjointed, right? I mean, we're still all, launching. We're still trying to, get more issuers on our ATSs. The secondary liquidity is still a little fragmented and elusive. So, there's a lot going on here. I think once it stabilizes, let's think about interoperability across all the different ATSs, whether, and maybe that's a regulatory statute. Like, we don't have, any NBBO requirements, which is the national best bidder offer. We don't have Reg NMS requirements, which is the new market system. So,
two views on this one, right? So today you can actually trade, like you could come and buy a share of Exodus on our ATS today, and then go over to T0 and trade, put it into your account and trade it there, and vice versa. You can move it in and out. So you can trade the same security on different ones, but kind of a unified order book where you have one order book that everyone's trading against. That's definitely, I think, a hope, where you'd have kind of a shared order book across the different platforms. And I think the technology, with FIX kind of exists. I think the gap is really in the clearing and settlement piece and how that actually works. With the way the regulations are structured, how do you do real-time settlement across different ATSs? Again, if we're the back end, we can do it as a TA because we have the software and we do that. We're connected to like INX and T0 and our marketplace, and things trade on those. And there's one view of truth that all runs through our protocol, which processes all the transactions automatically. But again, those are blockchain based, right? Then when you talk about a traditional security, how do you do that? Well, that's a more complicated problem because there isn't, as they say, that type of infrastructure doesn't exist. We very much think that the future obviously is going to be blockchain based. It's going to be Web3. And so there will be automated technologies that will enable that. It'll probably take us a couple weeks here to get the regulator to understand how that works. But, I do think that in the next 5 years, that will be a reality. I don't think it's a 18-month thing.
Okay, well, that's optimistic. So, so we're talking a lot about individual retail and accredited investors. What about institutional money? Because we started this entire session where it's my opinion that the private markets are the new public markets, because too many people float an IPO just to get out, and they kind of stick it to retail. When does institutional money, get into the mix? But Jamie, you're already doing some of that, aren't you?
Yeah. A lot of our deals have significant amounts of institutional capital in them. Even the Reg A deals that we've done have huge whales in them, big checks that are single, very large firms. So we're seeing that today. And it's one of the challenges, really, it's about the issuer and their willingness to commit to making this the one vehicle that they support. many issuers will start out with the idea of, we're going to use this one vehicle to raise capital or offer a secondary market. But then a large institutional buyer will come in and be like, well, I'll do it, but I want these special terms and this kind of side letter attached to it. And that makes it, not exactly the same. And so then you have a different share class that gets created. And so, functionally, if you are rigid in your offering structure, you can bring in, and it's a good enough deal, obviously, you can bring in institutional deals. That said, we also have very large institutional issuers that are trying to get down market to the retail and accredited world. And they need automated platforms to do that. So for us, that's a significant opportunity. You'll see a number of those things come out very shortly. But it's all about, in the end of the day, all the liquidity, this whole argument, everything we're talking about, it's about quality. If you bring quality assets that nobody else can access through other mechanisms to these platforms, then you will have buyers, you will have sellers, you'll have liquidity. And it's, liquidity begets liquidity, but you need quality to get there.
Right. Yeah. Lee, what about Rialto Markets?
Yeah, no, I agree. And, I think, there's, in the private fund space for sure, you're seeing a lot of institutional activity. With us, we're working very closely with several, private fund administrators in this very same vein. But I do think that the institutions are going to come, and they're going to come in mass at a certain point. I mean, portfolio managers and, research folks on these private companies to get access. Northern Trust had a nice paper out a few weeks ago. And, they mentioned that, was it CalPERS, I believe, said that they're going to go from in their private equity portfolio somewhere between 8% to 13%, which is approximately $25 billion worth that they're going to allocate to, private equity. That's a big jump. They're focused on it. They're starting to lean into it. And, we're going to be there for it, on multiple fronts.
Howard, and then I have one more question, and then we're going to open it up to questions from the people that are attending. Institutional money, is it coming? Is it going to come to StartEngine? Is it next month, next year?
Well, that's a great question. I don't know the answer to that. The main thing is we're focusing on consumers. And the institutional, they may want some special privileges, access, or prices, which would distort the market. So I don't know. Maybe one day, I think the day we would have, let's say, a few 100,000 people trading every day, I think they would come in because they would believe in the marketplace and have confidence to put their capital to work, because they would have access to liquidity down the road. And if they believe in the business that they're investing in, or the collectible, whatever it is, we probably will open up eventually an API for people to access it. But I just don't think it's going to happen right away for us. I think it's going to be a little while.
Okay. For my final question, this is one of my favorite things is regulations. I'd like to mention that the SEC currently has a regulatory proposal that says it's about, treasury bill trading, but really it's about ATSs and a definition of an exchange. I think that for regulators, they should be, looking to help all these platforms, you guys, accomplish your goals, because it's good for both sides of the equation. It's good for issuers and it's good for investors. And I would hope that they are doing everything in their power to empower this side of online capital formation. Are any of you guys concerned about, the regulatory flux, or maybe even this regulatory proposal that the SEC has posted? Lee, I'm going to start with you, and we're going to go around really quickly, and then we're going to open up for questions.
Sure. Yeah. So, the SEC is certainly, looking into this. They've got their hands full. There's a lot going on in the marketplace, and not just in, private assets, crypto, general market at large. But, just as a result, like the proposal you mentioned, the Reg ATS proposal, kind of that was baked into the Treasury market platform proposal just got extended by 30 days.
Yes, it did.
Comment period. So, they are listening to feedback. I've heard Commissioner Peirce talk about this, and she was hoping that it would get extended, and it looks like it did, because there's just a lot of comment periods. So they are listening and they are paying attention. And the SEC is about the little guy. They are about retail folks and protecting investors. So this is a good area for them. And I think folks say, they're not doing enough. I think there's a lot already been done. I mean, we're already here, right? We're doing this. We can facilitate this now, and I think it's just going to grow.
Okay, Jamie.
I'm not as hopeful right now. I'll be honest. I think there's a lot of big problems in the market, and I think that the current folks in control want more and more regulation, and they're not actually They want retail traders on exchanges. They don't want them other places, and I don't think that that's going to change in the short term. So they want the protections around that, and I think crypto is probably the heart of the problem. There's a ton of currencies that are trading with retail investors that are getting crushed, like what happened with Luna, and that just makes everybody look bad. And if retail can't be protected adequately, then why are they going to open up the amount of places that retail investors can trade?
Well, that's also an unregulated area too, right? There's maybe they should be on an ATS.
I wouldn't put them on an ATS. I don't know how you'd do it. I'd put them probably on an exchange.
Yeah, I kind of think that's what the SEC wants. They look at what T0 is doing with the Boston Stock Exchange, and they want to channel all the crypto assets in that direction. But you guys are really talking about digital security, so that's a little bit different. Howard, are you concerned about our regulators, our policymakers in Washington, D.C., rushing to help us, but messing everything up?
No, I'm not worried about them. I think they're doing a very good job. They're slow, unfortunately, but that's part of the making the sausage. We waited a long time for getting the Jobs Act. I'm very thankful that we have it. I think it's a great innovation worldwide, frankly. And I think we will see the improvements, and I'm excited about it. But you got to be patient. You can't be saying you want everything. So.
Okay, so I'm going to open it up to questions right now. We have a good number. Do we just lose Howard? I have Howard vaporized, so you guys are going to get to answer questions. Somebody asked about white label options. Are both you guys or either of you guys offering white label services for platforms that want to provide secondary trading?
We are offering white label based solutions in secondary trading. I mean, there are a lot of portals out there that don't have the ability or status to do this. So around the secondary trading. So Rialto is offering the ability to do that on a sort of powered by Rialto function.
Jamie.
Yeah, I mean, we have a similar setup. I'd say the catch is most people, when they talk about these types of marketplaces, are looking to get fees from the trades, and they're not broker dealers. And so that ends up being a non-starter, which usually kills the deals.
That's right. Okay.
Let's see. Does anybody want to comment on what's in the Jobs Act 4.0? We actually had an article we published yesterday that it's quite long, but it outlines everything. Do either of you want to comment on that? There's a lot going on, a lot of moving parts there.
Yeah, there. I don't know, Jamie, if you want to start, or I can start. Yeah, I mean, looking at the accredited investor definition, Reg D securities, as we mentioned earlier, are off limits to retail investors. There's a proposal in there that says that they can, retail investors would be able to allocate up to 10%. There's some language in the proposal around blue sky that if it goes through, that Reg A CF would be not subjected to blue sky rules. Those types of things, just, opening up just a little bit more of the avenues. Again, the accredited investor definition, trying to clean that up a little bit more. What does that mean? Right now it's, do you make $200,000 or, have a, $1 million worth of, liquid net worth? But what if you're, a chartered financial analyst, right? And you're not making $200,000 a year and don't have $1 million. You probably know your way around, financial markets. So I think that's a healthy thing to do. And that's just a couple of the areas. It's got probably 35, 40 sections in there that were proposed. And they're all quite interesting.
I personally like the one I'd love to see, because again, we're kind of more in the alts kind of world as a firm, and the one of the best performing asset classes, hands down, over the last few decades has been venture capital. It's also notoriously the hardest to get into. One of the reasons is because you can normally only have about 99 investors in a venture capital fund. They are proposing to increase it to 500, and I think that would be a wonderful first start. Things like that, I think, can move the needle, and really, because it's really, 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 really hard to pick winners and say which is going to be the next Facebook or Airbnb. It's really a lot easier to pick the next venture capital fund that's going to go out and do that work for you. And so, as personally both an angel investor and a venture capital investor, I can tell you I'm way better at investing in venture capital funds than I am in private companies. So I'd love to see that open up, because I just think it would be better for smaller investors. Absolutely.
I think, both of you, hit a lot of important items there. I'd like to add, for people who are listening, about Jobs Act 4.0. It's my understanding that this is a bit of a flagpole initiative right now. Senator Toomey is accepting comments. Please send him comments. If you go to an article on our site today, his email address or his staff's email address is there. Tell them what you think. I know there's a lot going on there, but the idea is that after the midterms, there may be an opportunity to actually pass some of this legislation. Some of it may get bipartisan support, some of it, not so much. But I think there is a big opportunity depending on how midterm elections go this year. And a lot of it is just really good, solid stuff. We did have a couple of questions about fraud and security. And if either of you or both of you can talk about this, because I think that's always a question that a retail investor will have when dealing with the platform, as to what type of cybersecurity precautions you guys are taking right now. I'll start with you, Lee.
Sure. Yeah. I mean, so we're still in the more, I guess, I don't want to call it traditional finance, maybe all finance. Private markets in general are overseen by the SEC and FINRA, right? So there's a transfer agent involved that's also registered with the SEC. You're dealing with with a FINRA registered broker dealer. These are not, it's not Luna. It's not, trading Bitcoin natively on chain. These, there are protections involved, and hence the Jobs Act, right? It created these new contracts of, Reg A and CF, and obviously, Reg D has been around a long time, but it added a new flavor to that as well. So I think, I wouldn't be too worried about fraud in this space. If you buy a security, through one of our platforms, you can feel pretty comfortable that it's gone through the process of going through the SEC, being exempted, having a lot of back and forth before it actually gets approved to move forward. The fact that it's listed or not listed, but that it's trading on an ATS, you're under a broker dealer's, purview, and, they're held to a higher standard. So, and then the transfer agent has to record all the shares, as to, who's on the cap table at any given, moment. And that's another avenue for you to pursue should you, have questions about what you actually own.
Yeah. You guys are regulated. Jamie?
Yeah. I mean, it's a very common question. It's usually related to kind of what's the difference between the cryptocurrencies and these securities. And, I think Lee pointed it out. These are controlled. There is a golden record of who owns what. if something weird happens, it'll be reported back to the transfer agent, us in most cases, and then we'll go through and look at it and say, oh, okay, this was done improperly, and we have control of the securities as a regulated entity, so we can always unwind a trade, move securities, burn securities, reissue them, whatever is needed. We're able to do that all digitally without the use of medallion stamps or FedExes or anything like that.
Okay, awesome. Okay, we're gonna end it there. I'm gonna ask Jamie first. Do you have any parting words of wisdom you want to share with our attendees?
When you're looking to build new markets, don't recreate everything in the old markets. There's a reason you're doing something new, and I think a lot of firms try to recreate every single part of how things work back in the day, and you don't need a lot of that stuff in the future. So, we're really excited about blockchain and what it enables, and how it empowers folks to take control of their finances.
Awesome. Lee?
Yeah, and I'll play off of Jamie's a little bit. I do think that there are some benefits to the TradFi markets. I mean, there's some obviously legacy things that need to go away, but we're trying to merge the best of the new with the best of the old, and take it forward. And I think, again, things like blockchain and tokenization and fractionalized assets are the future.
Absolutely. And I think those are both awesome comments. I kind of look at this and I say, it would be great to have the type of liquidity and volume that you see in crypto assets, but in a regulated digital security type ecosystem. And I think we're going to get there. I'm very optimistic about that. It's just going to take some time. So first of all, I want to thank everybody who's attended this webinar. Thank you so much. We are recording this, and so it will be posted later if you want to rewatch it, or please share it with your friends. And I want to thank you guys, our panelists, for making this possible. I really appreciate you guys sharing your wisdom, your information. You guys are the pioneers that are making this industry happen. So thank you, Lee. Thank you, Jamie. And we look forward to talking to you guys soon. So have a great week.